Hello, everyone, and welcome back to Global Campus Group. In this lesson, we will explore the personal finance sector. This is a very important part of Unit 3 because learners must understand not only financial products, but also the institutions that provide them, the ways they communicate with customers, the systems that protect consumers, and the places where people can go for guidance and support. By the end of this lecture, you should be able to explain the main types of financial institution and compare traditional and digital communication methods, understand the role of consumer protection bodies, and identify suitable sources of financial guidance, debt support, and formal debt solutions. Today's lecture has four main sections. First, we will study the features of financial institutions. Second, communication. Third, protection. And finally, advice. We will also explore what people should do when they need help with money or debt. The personal finance sector includes the organizations that help individuals save money, borrow money, protect themselves financially, and plan for later life. In simple terms, it is the part of the financial system that deals directly with the everyday financial lives of people. Let us begin with the Bank of England. The Bank of England is the central bank of the United Kingdom. Its key features include setting monetary policy, supporting financial stability, and issuing Bank of England banknotes. The main advantage is that it helps support price stability. A disadvantage is that when interest rates rise, borrowing can become more expensive. Now compare that with banks. Banks are financial institutions that accept deposits, provide current accounts, and offer loans. Next, we have building societies. A building society is a member-owned mutual organization focusing on savings and mortgages. Credit unions are also member-owned, but they are usually more community-based financial cooperatives. Then we have National Savings and Investments, or NS&I, the UK government savings bank backed by HM Treasury. Insurance companies help protect individuals against financial loss, while pension providers manage retirement savings. Learners should also understand pawnbrokers and payday loan providers as high-cost, accessible, but high-risk options. We now move to communicating with customers. Financial institutions use different channels depending on customer need and technology. The main methods are branch banking, online banking, telephone banking, mobile banking, and postal banking. Branch banking offers face-to-face support, while online and mobile banking provide convenience and 24-hour access. We now come to consumer protection. The Financial Conduct Authority, or FCA, regulates firms to ensure a fair market. The Financial Ombudsman Service helps settle disputes, while the FSCS protects customers if an authorized firm fails. The final part is information and advice. Citizens Advice provides free guidance, while regulated advisors provide tailored professional help. For serious debt, formal solutions such as individual voluntary arrangements and bankruptcy may need to be considered. Let us now summarize. The personal finance sector includes a wide range of institutions, communication channels, and protection systems. Thank you for watching this lecture on Explore the Personal Finance Sector. I will see you in the next lecture.